In today's video, we're going to discuss if it's too soon to buy YMAG and other Yieldmax funds that are more index-based rather than the stock-specific funds that we discussed in the prior video. We earn over $200,000 per year in dividends at this channel, and my performance and value shows that we're actually beating the market. We're up 6.19%. Even with all of those dividends. Most people would think that when you get dividends like with Defiance and Cornerstone and Yieldmax, that they decay and go sideways to down, so you'll never beat the market, but we're actually beating all the indexes. We're up 6%, the S&P is up 4%, the Nasdaq's up 1%, the Dow's up 1%, and the Russell is down about 4%. So we're beating all of the indexes on a year-to-date basis, and on a daily basis, we're up 0.96%. or $8,400, and $8,400 isn't important. It's the 0.96% that's important. If you look above, you'll see that it beat the S&P, which is up 0.87. The Dow was up 0.67. So we are in line with the indexes on a daily basis today, and on a year-to-date basis, again, we're beating all the indexes, living the FIRE lifestyle, which means financially independent, retire early. If you need help doing the same, email me for my e-guides at aikentod48@gmail.com. Yes, for every $1 you put in your account, you get $4 of purchasing power. I'm just using a fraction of this nearly $1 million in purchasing power to get ahead. This $327,000 in debt that I have is nothing to me because it's low interest. I've negotiated my interest down twice. Many of my clients who bought my e-guides did the same thing. Plus, this doesn't show up on a credit check to banks, and my dividends of around $200,000 per year will pay this back in around 1 year. So I'm not worried about the risk of margin because, again, my dividends pay back my leverage in around 1 year. Then my account will grow by the equivalent amount. This 561 that you see account value, it would actually grow by 250,000 or so because that's what I earn in dividends. So I never want to take my debt all the way to zero because every time I pay it down, I rinse and repeat and add more debt because I want to get ahead in life. Inflation is too high. This life is too hard. 50% of people are paycheck to paycheck. So I'm using debt to get ahead because that's how the greats got ahead. How did Elon Musk buy Twitter? With his margin debt. Most corporations also use debt. So I'm using this debt to get ahead. And even though we have this debt on, we're still outperforming the market even after the recent downturn. So this is just phenomenal to me because you would think that with all of that leverage that I'd be getting hurt by the market. And also you would think, again, on a day's gains basis, $8,400 that we're up today, you would think that this is impossible when I buy funds that go sideways to down. That's the complaint I hear about Yieldmax, Cornerstone, and Defiance is that they give you great dividends, but they go sideways to down. Well, look at my total performance, okay? I know some people are buying treasuries and bonds and other kinds of funds that don't decay as much as Yieldmax, like perhaps an SPYI or let's say a Schwab D, but they don't outperform the market. That's the problem with them. You need to outperform the market because outperforming the market, well, it's not everything. I mean, we're just trying to live the FIRE lifestyle with dividends. I don't really need days gains, but days gains are icing on the cake and they help add to your available withdrawal. You have to keep this number high in order to live the FIRE lifestyle. So I can withstand over 20% corrections in the market and still withdraw freely out of my account because my available withdrawal is high, okay? The secret to high available withdrawal is indexing and picking names with low maintenance, but we'll discuss that later in the video. So even with margin debt, my available withdrawal remains high because I have low maintenance names, and my performance is still staying in line with the indexes because I buy things that move down less than the indexes on a typical down day. For example, if you go to Cornerstone, you'll see that, well, look at SPY. It was up 0.92% today. When the S&P is down, usually Cornerstone and Defiance will be down less than the S&P. So that's how I'm still beating the market even with all this margin leverage. It's because I buy funds that don't actually go down as much as the indexes. I mean, I don't even like buying stocks because they fall by much bigger amounts than the indexes. So if I'm going to buy the indexes, well, I prefer being in indexes that move down less than the indexes, okay? So QQQY moves down. Last Friday, the Nasdaq was down around 2% and QQQY was down around 1.5%. So that's how I outperformed on Friday. Even though we lost a lot of money, I still beat the indexes. So QQQY, this is my secret to not only getting all the dividends that I have, but to beating the market on down days, even with all this extra margin leverage, okay? QQQY, Cornerstone, and Yieldmax, but you have to combine them properly, okay? If you want to follow my portfolio, just click the join button on my wall, or I'll link that in the description below. Joining my portfolio does not mean you're just subscribed to my channel and you get my videos. I do live videos and other kinds of videos on YouTube in my membership section when I'm not on Discord. So it's not about what you buy, but how you buy it and how you allocate with those funds, okay? Let's take a look at SPY first, because this is what the whole market is, and as the S&P goes, so goes the rest of the market. So far, we're looking pretty constructive here. We've had a pullback to around 500 a share, or the 100-day moving average, which is the purple line. This looks like an attractive entry point if you're a long-term investor. If you're a trader, this also looks like a place to define your trade risk with this last candle here. You could put a stop loss below this recent candle. You could buy here and then put a stop loss below this day's low here of 493 if you're a trader. But I'm not a trader because trading gains don't work for banks and qualifying income. They only take dividends and pay stubs. Banks, again, will not take trading gains or Bitcoin gains. So I only use charts to get better entry points for my long-term dividend plays, okay? Because I tried to get a house once and I used my trading gains to get this. I thought maybe 100,000 in my account would be enough to get a house, but the banks, again, did not want my trading gains. They wanted reliable income, and that's how you live the FIRE lifestyle. It's from dividends, not trading gains. Plus, trading gains are inconsistent. 90% of traders lose over time and can't beat the S&P. This way, I buy the S&P with dividends, with margin, so that's how I always beat the S&P. Even a down year, we outperformed in 2022 because our dividends from margin pay back the margin, and this is how we get our growth. We get growth from dividends and leveraged dividends, not the market itself. But when you get up days in the market like we had today, an $8,500 day, well, that's just icing on the cake. But I don't care if we go down or up. Remember that. I just care about being in line with the indexes, because at a maximum correction on a given down year in the market, you would see perhaps a 20 to 30% correction like we did in 2022. So I just need to be able to withstand those kinds of corrections and fall by that amount. And if I'm with the indexes, then I'll fall by the amounts of the indexes. And if I'm in low beta names, slow moving names like Cornerstone and Defiance, well, then on down days, again, I'm down less than the market. So the S&P is looking attractive here, okay? Now let's go check out QQQ, the NASDAQ, because the NASDAQ is also a very important index, much more important than the Russell. So here you see we had a break of the 100-day moving average, and this looks quite bearish. However, we're hugging. When you have a hug here and you have a break of the 100 followed by a hug, this is actually quite bullish, and we're oversold on the RSI. As you can see here, we're near the 40, near 30 on the RSI. If you need help understanding charts, that's in my Volume 2 e-guide. So this is looking pretty constructive if this level can hold. Again, if you're a trader, you would buy here and then put the stop loss here below the day's low of 413.07. So I'm not a trader again. I don't like to get shaken out of things, and banks don't take that for the FIRE lifestyle. So QQQ is looking constructive. Let's go to the Russell now, IWM. Okay, and this looked particularly attractive to me. This is on the 200-day moving average. So I definitely added to some Russell-like plays today. There it is, 200-day moving average, oversold. This is a textbook buy. On a 5-year chart, it's still cheap. The Russell looks attractive. So these index charts are looking quite constructive to me. Now let's go to a chart of YMAG. Now, we don't have enough information on YMAG. I understand that. We can also go to a chart of Fangu to see if it's really tracking properly. Fangu, it has snowflake in it, so it's not a true representation of the Magnificent Seven. But here we go. On a 1-year chart, we're at the 200-day moving average for Fangu, okay? Hybel is another indexed ETF that I use. It's triple leverage, so beware. But Hybel, it's on the 200-day moving average. So this is looking very constructive. The whole market is looking like an attractive buy here. So it makes me want to buy more YMAG and YMAX. Now, I'm pretty overloaded in those positions, so I've been adding to other funds within the portfolio. Again, if you want to see those funds, just click the join button on my wall, or I'll link that in the description below. YMAG, though, I might add 1,000 or 2 tomorrow. I mean, I've been rebalancing on the dip already. The problem with YMAG is that it's 50% maintenance, okay? So if I add too much to YMAG, it sucks up half of my equity. If you need help understanding maintenance, that's in my Volume 3 e-guide. YMAG and YMAX, they're both 50% maintenance. Now, most Yieldmax names are 50% maintenance. You can go to other brokers that have lower maintenance. Don't worry about it. However, those other brokers might not have the special drip for Cornerstone. So if you go to Robinhood or Interactive Brokers that has lower maintenance, again, they might not have the special drip for Cornerstone. Cornerstone is what I anchor my portfolio to. This is why I was up so much today. Cornerstone was also up about 1%, each of the Cornerstone funds. These percentages that you're seeing here are after-hour percentages, but yeah, they're up about 1% today. Cornerstone, it is a 4-star fund, and that's why I put about $400,000 of my dollars in Cornerstone, okay? It also has a 21% dividend. that it sets every year at its NAV so they don't fluctuate the dividends, and it drips the dividend down at the NAV. So if you own Cornerstone here, let's say, well, it's dripping the dividend down at the bottom. No other funds do this, okay? This is why I'm outperforming. I put so much money in Cornerstone, and it has the special drip. So it's been dollar cost averaging for me on the dips in this market. I don't even have to buy myself. It buys at the bottom for you. That's how I outperformed in 2022. But you have to play Cornerstone properly. You have to trade this around its rights offerings, and that's in my Volume 4 e-guide if you want more help playing Cornerstone. Here in the Discord chat room, this is where we alert you of that Cornerstone rights offering announcement as well. So we have almost 1,000 members here in the Discord chat room pursuing the FIRE lifestyle who can answer whatever questions you may have on your brokerage if I can't, or if your broker can't answer that question, because not even the brokers know all the answers. Some brokers don't even know what the special drip is for Cornerstone, okay? And then you can also really level up your account with Cornerstone rights offerings, and that's why we have the announcement here in Discord. Okay, we have an RSS feed that's set up here, so it gives us the announcement automatically. Also, Discord is great if you're just looking for support living the FIRE lifestyle. I had to do this all by myself when I started out pursuing the FIRE lifestyle, working with margin, perfecting this system. I had no help, but you can go to Discord and get help from around 1,000 members here. Okay, so that's very comforting, and you can use that tool at your disposal whenever you need to. Okay, so YMAG and YMAX, they're looking constructive because the overall indexes are looking constructive. Just be aware of the maintenance in those funds. They suck up a lot of your equity. If you need help with maintenance, that's in my Volume 3 e-guide. And if you want to anchor your portfolio to Cornerstone, just remember you have to time Cornerstone around its rights offerings, and that's in my Volume 4 e-guide. Also, I can't get too excited about SPYI or SPYT because, again, 50% maintenance. That's a killer to the FIRE lifestyle. Go try another broker. I know Fidelity has lower maintenance and it has the special drip for Cornerstone. So that's where I'm going to go. If I ever get in a bind with E-Trade, I'm going to just switch over to Fidelity because Fidelity has much lower maintenance. Most members here at Discord swear by Fidelity, and Fidelity also has the special drip for Cornerstone. So it has everything you need to live the FIRE lifestyle at Fidelity. Okay, so that'll do it for the video, everyone. If you need help doing what I'm doing, email me for my e-guides. Also, remember, you get my phone number and Discord access for free when you buy my e-guides. And again, if you want to follow my portfolio to see how I'm outperforming the markets, just click the join button on my wall, or I'll link that in the description below. And I'll talk to you soon, everyone. Thanks.